traders, what up investors? Ken here from Dyslexic Investor, and today we're going to be looking at Tesla, spending a very low amount of potential cost to make this trade, and then trying to make a pretty outlandish return. Completely facts aside, or facts straight on your plate here, basically understanding that these are very risky trades, especially going into earnings or playing after earnings, which is most likely where a lot of people will be playing this into, and just kind of give you maybe another what's the word? Another specialized dart or an arrow that you can have within your basket or your quiver, in your arsenal to better play options. And it is risky. Again, most options are, but you have to be very careful on what you're doing. So looking here at Tesla, Tesla has earnings coming out Monday after the close. So we can see that here highlighted here within Thinkorswim, 726, the year of 2021, and it says after market central close. So normally the numbers come out around on Eastern Standard Time around like 4:20, no pun intended, to 4:30, and they usually have a conference call like maybe an hour or 30-40 minutes later after the market closes. Sometimes a little bit later because again, most of the times they go off Pacific Standard Time. So how are we going to be playing this expected move? So like the options market, so if you go within the trade tab here, and you go into the next week's expiration, we're seeing a plus or minus move around $60. So I normally don't trade directly out of Think or Swim here. I usually trade directly out of Tastyworks. So there's an affiliate link down below if you're interested on checking them out. For the same expirations 8 days away, they're saying about 48 to 49%. Let's just call it $50. So $50 to $60 move potentially. That means up, down, potential move. So the current stock's around $655. So we're looking at a $60 down move that would be cutting it past that $600 level to like that $595 range there. Would we be kind of putting into that kind of territory there? That's going to be a pretty the deviation move at least 1 plus. And we'll see if that can go to the upside, to the downside, or go to the upside. Of course, that would be breaching that $700 level and getting that 705 plus potentially to the upward band. That doesn't mean that it has to happen the day after earnings. They're just saying the options market saying there's a very high probability and that they're counting in for the potential move to happen about a $60 plus or minus swing move. So let's go back to the chart here. We can kind of look at that potential level that we want to see that market move. So within the current price range as of today, basically 2:30 here Eastern Standard Time on the 22nd, we're looking for potentially $60 moves into next Friday. Not this Friday, next Friday, because again, we have to follow the options contract, which is after earnings. Again, earnings is on Monday after the close. I'm saying after a lot. So basically $55 plus 50, which was the Tastyworks expected move, would put it to what? 705, right? So it's going to kind of put it to that upward band up there, the 705. And then if we add another $10 on top of that, that's going to be put at like that 715 to 720 potentially on the higher ranges up there. And then same to the downside, the Tastyworks $50 would be put it at 605. I gotta have it at 600, and then basically at the 590 range as well. So this is going to be kind of just temporary looking at these are the potential market band moves. So we can kind of go into a smaller, like a 30-minute chart. You can kind of see here these expected moves that we could see on that expectation move that we're seeing here within the options market. So you're asking, Ken, how in God's green earth do I play these potential moves? You can just do the more simplistic way of just maybe selling some puts or some calls, maybe do an iron condor. But we kind of do know that Tesla does have some pretty sometimes crazy moves. As you can see, that Tesla is fairly volatile at times. But normally around earnings, it doesn't do that much. If we're kind of going through here, it does gap down the last couple of times here on earnings because, again, the earnings numbers and the expectations. Then you have the folks on the street, aka the analysts, aka the different bankers, aka the different analysts that are just giving it a up down, basically giving their impressions. And that's very emotional times, honestly. The right after the earnings numbers come out, you really see the price really kind of jump around and jitter quite a bit, and it really needs to take at least at best to kind of find some kind of ground. um, the first part of like, so if it comes out on earnings on Monday evening, we won't really get a consistent price and kind of looking at the potential level until Tuesday after the open around 10 to 10:30 a.m. That's going to be kind of when the potential price is going to potentially stabilize, unless it's a insane move. So we can kind of look at Netflix. So if we kind of zoom out to Netflix, of course, they had earnings just a little bit ago, aka last night. And we can go in here to like a 30-minute chart here. So 2 days ago, we've seen a pretty large market drop. There's someone bought some shares at $496 after the market. Play this huge emotional spike here. You're really going to be playing against a lot of the AI or the algorithmic traders there in the after hours release. You see come in the following day, so after the earnings announcement, you see the first 30 minutes, which we're talking about, that 9:30 to like 10 o'clock, completely emotional moves. Then you have that 10 to 10:30 Eastern Standard Time, where you're trying to stabilize, and you kind of see that pattern playing out here. So around that 505 to 508 has been kind of some level to kind of hold here. Can it hold here for the rest of the week? I don't know. Maybe not. This could be like a week potential hold here in a very short term position, and maybe start cracking down, going lower. But as of right now, the market has kind of analyzed that and kind of given it some kind of support at that range. So switching over back to Tesla, again, you can be selling premium on it. Going into earnings, you can sell it after. Of course, the IV is going to be lower after the fact of that. But something that I like to talk about, and I think a lot of people do, is butterflies, which is a very interesting play if you're not familiar with it. So basically, it's like casting a net. You're casting a net on the potential market move. Again, we're looking here on the 30th, so the end of the month options for Tesla, and you want to build a butterfly. So it's basically going to be actually 4 different components. It's going to be all on the call side or on the put side, depending on which way you want to play it. So imagine you're like, okay, I think Tesla is going to basically move or stay in around the range of 675 to 700, okay, or even 710 or whatever like that. You're gonna say it's not gonna go below 650. So you can do these different various sizes of butterflies. So we're gonna be looking at on what that trade would look like. So for example, if I want to kind of call the middle, so currently we're at like 655 to like 700. So the middle would be kind of be around that 675. So I want to actually sell that particular option short. We're going to come back to it. We actually want to sell 2 of those short. And then now we want to buy 2 options that are equally apart from that. Unless you can do a broken wing butterfly, we're just going to do a completely even wing butterfly here. Say butterfly 10 times real fast. Or say it in German, which is Schmetterling. Anywho, so let's say I want to make this, let's make a pretty easy number, 15 or $30 wide. So again, 30 times 2 is 15, basic math, right? So you would buy the 660 call. Okay, that's $15 from here. So then another $15 higher would put it at what? 690. Good job, you passed math. But here's the characteristic. We don't want 2 options here. Sorry, this is fat fingers going on. Now 21 there. Now we just want to select all of this, and we want to down. There we go. Nope. Hold on. I'm just going to reset this real fast. So we're going to go here, and then we're going to go, we said 15, bada bing, bada bang. Then we go back to this option and we're going to increase it by 2. So basically, this is the scenario that could happen. If you're bullish on Tesla going to next week and you're thinking that Tesla's might go higher, it's going to stay somewhat bullish. It's going to at least make its way up higher to at least 675 or at least 660 or higher into next week, and it's going to expire within this range. So basically what you're projecting out on this particular play is by end of next week or 8 days from now that you're going to say with earnings already passed, you're saying the stock's going to be $660 and $690. The most money you can make, as again, you can make $1,300 plus if the options completely expire at 675 on Friday. Again, theta decay is going to be your best friend here. So that's why you're kind of casting this net. You can see here once we kind of moving it down. So let's move it up or come in 5 points. Of course, the cost goes down. Your probability of profit goes down, and you're containing a little bit more of a narrow sight. And at the same note, you can go much further out. Here, of course, your probability of profit goes higher. Of course, the cost of the overall option takes higher, more of a potential profit as well, but you're playing with a larger area. You're casting a larger net. What's it take to cast a larger net? More capital. Of course, with more capital comes more risk, right? So it kind of, you can really play this very fine news. So if you're like want to play completely like magic, you can go at just maybe just selling your, look how much volume has been traded just today at that $700 call for next week. So let's kind of make that our middle point, and then we're going to do out like $20. So we're going to do $20 up, so it's going to be a $40 wide butterfly here. You're going to see here the casting the net, pretty high probability of profit. Probability of profit of 50% is around 45%. The delta and the theta is playing on your behalf here, especially that theta decay if you can get that options to do well. So basically for $2, I could potentially make $1,800 on this trade. That is only if this $700 call option that I'm selling is basically at or in near the money when this option's expiring next Friday. Not this following Friday, but the following Friday after earnings. So you can play this, again, being a Tesla bull, completely talking about my book. You can do the exact same thing on the put side, right? You can do the exact same thing. You're like, I think Tesla's going to 600. So you can just, guess what? Start with the middle of the butterfly, $600, right? And then you can just do $10 wide here, or $20 wide completely, and you can risk 47 cents to potentially make $953, right? That's pretty amazing. You only have an 8% chance. It's a very low probability, but you're only risking 39. It bounces around quite a bit because, again, these options are pretty wide across. Again, these are not with even the expected move, as again, the expected move is only $50 to $60 potentially. So this is potentially more of an outlandish move here. So the thing is, if the option moves completely lower or completely higher through your butterfly, or what they call the last leg, which basically on this example would be 590. So if the stock just crashes and it goes all the way down to like $500, your butterfly is completely worthless because you're casting the net only within these two ranges with this wingspan here. You're basically saying in 8 days from now, I think Tesla's going to be between 590 and 610. Again, we can make this go out as high, as crazy high as we want. So again, let's just do that $700 range again. So that, again, it's very popular, a lot of volume, a lot of open interest that going out there looking at that particular option. Let's just do like $100 wide, okay? So again, that's what's 100 times or divided by 2 is what, 50. So 7, so we're going to buy that 750, and of course 700 would be 650 here. Which is slightly in the money, and then we want to make sure we sell. We have to, the key component is the middle of the body of the butterfly, or the middle of the wingspan. You have to sell 2 of those particular options. So in this particular trade, you are seeing a much higher probability of profit, but you're paying a lot more premium here, right? You're paying nearly $1,200, $1,265 to make this trade. your potential max profit is $3,753. So that's, again, if that option lands completely on the $700 price target, or that option's coming in to the expiration of 8 days from now on that Friday. I hope this kind of makes sense. It was kind of a little bit long-winded. If you need have further examples or further questions, please join the Discord. Would love to kind of explain it to you more in depth in person, and kind of give you potentially some risk to rewards on that notion. But again, guys, thank you from the bottom of my heart, and I'll catch you guys in the next video or the next live stream. Peace.